don't do it. You don't have to do that bet when the assets are growing at 150% a year at the base asset, Bitcoin or Ethereum. You don't need to buy NFTs. You don't need to buy meme coins. You don't need to do any of these things. That's the really hard thing is the system sucks you into greed if you're not careful, and it's unnecessary.
The financial world is about to change significantly, which could alter how people create and protect their wealth. Picture an asset type now worth $3 trillion that could leap to $100 trillion within 10 years. This rapid increase would need an enormous amount of investment from institutions and investors worldwide. However, this asset class is still very new, only 3% of the way to reaching its full potential. The chance it offers is both huge and transformative. Paving the way for a new age in finance, renowned macro investor Raoul Pal puts this vision into perspective with his bold and captivating analysis. People ask, am I too late when Bitcoin hits $100,000? He emphasizes that even at this point, it's just a small part of the trip. Pal expects a huge growth of 30 times from current values, or at least a modest growth of 15 times. This message is simple. The digital asset world provides a unique chance to make money like nothing else available today. Those who are ready to adapt to this change could see great benefits, much greater than traditional investments. Let's watch clips from our Pal's intense conversation to learn more. Don't forget to like, subscribe, and turn on notifications for more detailed information. Thanks for being with us again. Have fun watching the movie.
Tickets to agreements to whatever. Human society is organized by contracts.
Mm-hmm.
So then what's the probability of scammed at the token level? 0. These are huge distributed multi-million people networks.
Speaking of Ethereum and Bitcoin.
Yeah. And Solana and many of the big ones.
By market cap, the top ones, kind of like the same.
Where people lose their minds is they want to get rich quick.
Chasing the next meme coin, the next big thing.
Well, because people suddenly start to say, oh my God, I don't need to be trapped in the world of 10% a year in the stock market.
Right.
I've now been given this 100% a year, and then you become greedy. Mm-hmm. All you see is, I could make 1,000% or 10,000%. And then you do stupid shit. And that's when you get scammed. Because now you're exposing yourself away from the simple bets of investing in the technology layer to now you're investing in the applications layer. And that's when businesses are starting, who's building what, it's a meme coin, it's a DeFi protocol, it's all of these things.
ICOs back in 2017,
and
2018.
Then you've got to ask yourself, are you qualified to be a venture capital investor, early stage? Are you doing the due diligence?
Taking the risk as well.
Taking the risk.
Yeah.
Right. They all are a power law. And so what that means is most of their bets go to somewhere near 0. Or let's say 20% go to 0, 50% don't do anything, and 10% make all the money. Now, are you qualified to do that? No, then don't do it. You don't have to do that bet when the assets are growing at 150% a year at the base asset, Bitcoin or Ethereum. You don't need to buy NFTs. You don't need to buy meme coins. You don't need to do any of these things. That's the really hard thing is the system sucks you into greed if you're not careful, and it's unnecessary. Matter. You see, everybody looks at it through their lens. And the lens may be you're from Venezuela, so you think you can have it expropriated. Mm-hmm. Or a gold investor in the US, well, they took gold. They didn't do it in Europe. But different people use their different lens. But we don't realize, and so you're worried about regulation.
Right.
It's a global asset. The Chinese have banned it.
And
the Indians, nothing happens.
Right. A little dip here and
Why?
there.
Why? Because this is a network of millions of individuals. Mm-hmm. This is not driven by the institutions. It doesn't matter whether they come or not. People want to be validated. It's a ridiculous thing.
Yeah.
Oh, BlackRock think it's good, so therefore I'm not stupid. It's like, you're not stupid because literally hundreds of millions of people are using this,
right,
making money from it, building on top of it, and creating a new future. So therefore you can't be stupid. You do not need some bloke on television telling you that it's valid. So what we've done for the first time in history, if we go back to how I started this journey, those of us at the center would get the opportunities. And then you would charge layers of fees until it comes down to the individual. Mm-hmm. Well, they didn't even see them. They don't get to invest in Facebook when it launches. You know,
Or Uber or Airbnb or whatever.
anything,
Yeah.
right? We don't get any of that stuff.
Mm-hmm.
It eventually goes into the public stock market and at several $billion. Yes, it went up a lot after that, but somebody's made 1,000,000% returns before
Mm-hmm.
then. Right? This is the complete inverse. There are no gatekeepers. Retail are first. They front run all of the institutions. They get all the opportunity, all of the upside. And the institutions come later and force the prices up, and we all get hilariously rich. Genius. It's a complete inversion of how the financial system works. So it doesn't really matter. I know people want the validation. Regulation helps because it stops governments shutting down your business in a different country. So yes, it helps, but don't forget, it's currently a $3 trillion asset. I think it goes to 100 trillion. The only way it gets there is to have more larger and larger pools of capital coming into the space. But if you think of it in those terms, it's still only 3% of the journey to where it's going to in the next 10 years.
Jesus.
Yeah, so it's got
You're-
1%. And it's therefore it should go up 33x from here. Okay, find me anything else. Assume that I'm wrong by 50%. It goes up 15x from here. Find me another investment anywhere in the world that will unfuck your future like this. It doesn't exist. Certainly not one you've got. Risk profile of loss of life.
Yeah.
Right, so I understand, like people in economic hard times choose extreme situations. Now, given the choice, let's say you are on a border town in Mexico,
Right.
right, and you can either work for the cartel and get a decent living, but you've got risk of death. You can probably make higher percentage, well, you will make higher percentage returns in crypto and not have to have risk of death. So really, it kind of should force a lot of people out of other industries. Yeah, more illegal industries where people need to make money. Because the reality is people in the drug business aren't bad people necessarily. The system is bad of what they're doing, but really they're just individuals trying to unfuck their future. If you're in the cocoa farms in Peru, you're not thinking that your farming is killing kids in nightclubs in Chicago. You're like, I need to make a living and pay for my kids. I don't want my kids to die off, So the incentivization structure is very different. But here we've got something that can get you out of that. It's fascinating.
The life.
The financial system is struggling because of high debt and slow growth. Governments keep printing money to survive. Our pal compares this situation to juggling credit cards, while valuable things like real estate and stocks keep getting more expensive, leaving regular people behind. Traditional savings aren't enough anymore, but two big trends, technology and cryptocurrency, could provide a solution. Cryptocurrency is like owning a piece of the internet and can significantly grow wealth. PAL advises you to invest in yourself. Follow these trends to take charge of your financial situation. Crypto is changing the banking system and giving more power to people. Raoul Pal calls Bitcoin a global indestructible asset and Ethereum the internet's supercomputer allowing smart contracts to reshape society. While greed tempts many into risky meme coins, PAL is asking to concentrate on basic assets that are growing over 100% each year. Retail investors are now ahead of institutions in a $3 trillion market that is expected to reach $100 trillion. This is your opportunity to join a financial change and improve your future. Let's watch more parts of the talk.
It's from the Philippines, and all the guys in the barbershop are all Filipinos. and they're all crazy crypto dudes. I'm like, why? What got you into this? And Asians like gambling. Okay, I get that. But he's like, simple is we send money home to our parents or to our families, remittance payments.
Yep.
And we just learned that crypto was the easiest rail, so we all opened a Binance account.
Yeah.
And then once I've got a Binance account, I'm like, what's this? Oh, this is going up. And then they're in.
Right.
And so these are pretty simple folk from the Philippines. I mean, my barber had here in the Cayman Islands, if you haven't got a permanent residency, every 7 or 9 years, you have to leave for a year and come back and reapply for your permit. And he'd been off for a year. And I just saw him last week. I'm like, Jules, what have you been up to? Were you working in the Philippines? He's like, no. I said, why not? He goes, Solana. He's like, I didn't need to work. I'm like, really? He's like, yeah. He goes, I made 10x in Solana. I spent a bit of that. Didn't work. So I spent a year with my family. doing some good stuff, traded a bit of crypto. I'm like, okay, that's the empowerment.
That's what you call the lifestyle chips.
This is a barber from the Philippines that's working in the Cayman Islands, and he can not work for a year because of his investments. That's La La Land. Go to a barber in New York City and say, hey, you're not going to work for a year. Can you survive? No. Zero
Not even for a
chance.
week.
Yeah, zero chance.
Yeah.
You can earn income.
Right.
The game is to try and get some excess income.
Mm-hmm.
But if you don't invest, then you're always having to work for that excess income.
Yeah.
And you're not compounding the ability to get somewhere different in life that you want to. Who sold their house to take the money out? You don't, you live in it. You only would sell it under the worst duress, the worst situation. Like I was speaking to a friend of mine who fled Venezuela. They sold all their assets, fire sale prices. But otherwise, look at your parents. They still own their house. So what the fuck was that money for? What? So they have a roof over their heads? Well, you can rent and do that because, as you rightly said, if you don't pay, you go through tough times, you lose your job, or your business falls apart, and you can't pay your rent. You don't own the house. It's gone. Goodbye. So what's the difference to renting? If you're not actually getting an asset. Now, it's different if you're buying other houses as assets to build a portfolio.
A multi-family complex and renting.
Whatever. And I still don't even like that business. But let's assume you'd want to do it. Fine. But your house is not an asset. It will get you nowhere. Whatever it is, it is not an asset. Now, it becomes an asset in lifestyle terms when you don't have a mortgage on it. Because now it can't be taken away. Yes, the government can theoretically, but it comes much harder.
Right.
So therefore, that is the game, which is the lifestyle chips. That's lifestyle ratchet. That is not an investment. So the game should be, how do I make enough money that I can buy that apartment in cash? That is very different, because the apartment is not the asset. The lifestyle is the asset.
The rising price of Bitcoin, which has now exceeded $100,000, is an important event in the world of finance. This relates to Raoul Pal's views on gold and the strength of the dollar during Donald Trump's time as president. The U.S. is likely to take a lead in cryptocurrency. Supporting policies like a strategic Bitcoin reserve can help stabilize countries, similar to how gold has been used. Pal's comparison of Bitcoin to gold makes sense because both are limited resources that do well when the economy is unclear and when money loses value. Trump's plan for a strategic Bitcoin reserve shows that Bitcoin is becoming more recognized as an important asset for the country. He has noted that as the value of the dollar drops, limited assets like Bitcoin and gold are becoming important protections against inflation, similar to how the dollar serves as a major global currency. Bitcoin is becoming a digital form of money that isn't controlled by any government. It can be used by people all over the world. Its lack of central control and limited supply make it strong, even when people doubt it or the market changes a lot. This change is not just about making money, it's about rethinking how financial systems work. Pal notes that regular people, who were once left out of big investments like early tech companies, can now directly invest in Bitcoin and Ethereum as more institutions are showing interest. Retail investors can gain from changing traditional power relations, especially with the Trump administration supporting cryptocurrency trends. Bitcoin's increase in value reflects the rising need for alternatives to regular banking. This strengthens its position as digital gold in today's economy. As we finish, do you think Bitcoin is a better investment than traditional assets like gold or real estate? Share your thoughts in the comments below, and don't forget to like and share this video. Thanks for watching. Please remember to like and follow.